Thanks so much for tuning into this earnings interaction, with Mr. B Thiagarajan of Blue Star. Well, against the backdrop, which is looking largely uncertain, the company came out with a commendable performance. Consolidated revenues up about 40%, EBITDA up about 40%, margins maintained at about that 6.3, 6.4% mark, despite what I presume would have been a quarter of fairly large uptick in input costs. The PAT, of course, was up a mere 12%. But we'll talk about all of this. But more importantly, talk to them about how FY23 is likely to shape up, considering we are, at least in India, seemingly past the COVID-induced madness and disruption. At least that seems like for now. Mr. Thiagarajan Johnson to talk about that. Mr. Thiagarajan, great having you. Hope all is well. Can you sum up succinctly, what you thought were the key highlights from the quarter? Because I saw that both the revenue growth as well as the margin performance look very stable.
Thank you, Neeraj. It's a pleasure interacting with you as always.
Thank you.
As you would have noticed, the revenue growth was 39.5%. The operating profit grew by 40%. The margin was flat from 6.3, it went up to 6.4. For the PAT, it was around 9% growth. Net profit grew by 12%. The carried forward order book stands at 3,253 crores. It's all-time high. 1 year ago, it was 2,952 crores. The earnings per share has improved to 17.44 compared with the 10.42. The net borrowing is just 67.14 crores. If you recollect June 2020, at the peak of the pandemic, we had 420 crores of borrowing. And we had raised money through NCD of 350 crores. And we will be repaying 50% by exercising the prepayment option in May itself. Okay, so the cash position is extremely good. The momentum gained post the pandemic last year, that is after the second wave, it continued. While the festival season was not all that great, but towards the new year, the momentum was gained, and we ended Q3 on a very high note. That continued through Q4 as well. This is despite price increases that had taken place, and the input costs had gone up. So we had passed on substantially the commodity price increase to through the price increases, but still you will see there is a margin dip in the cooling products segment. What was 7.9%, it had come down to 7.0. We would have ideally ended with 8.5. That was our goal, 8.5 to 9. But this is primarily due to the commodity prices. We couldn't pass it on. We have once again increased the prices in the month of April as well, after the financial year. And the demand still continues. So several actions have been taken with regard to the margin improvement measure, which I will explain a little while later. So the other highlight is the segment one, electromechanical projects and package air conditioning systems. Mm-hmm. The construction cycle is on. After many, many years, you are seeing a lot of construction happening. During COVID, we had interacted, we had indicated at that point of time, offices as a segment is not going to come back because new way of working, etc. But surprisingly, office spaces are getting occupied. Sure. And you are seeing investments in retail, you are seeing investments in hotels. So infra buildings are also back, but the primary driver is manufacturing. So quite a bit of capacity expansion is taking place. So manufacturing tops the list, followed by data center, where we are a leading player. Then the buildings segment and infra projects like the water or airports, metro railway. These are all driving the growth. There, the margin improved from 6.2 to 6.7% despite the commodity price increase. And our revenue growth was 44%. Results grew by 83%. The unitary product segment revenue growth was 39%. This is despite losing the summer season. If summer season would have been there, then you can imagine what would have been the growth. And the results grew by 43%.
Got it.
In the professional electronics industrial segment, again, the capex cycle is back. The revenue was up 40%, results up by 26%. So on the whole, we had ended the year on a very high note with an operating profit of rupees 346 crore. It is all-time high.
Sure.
And the revenue crossed to 6,000 crore. So I think the same momentum is continuing thanks to the hot summer season or the heat wave that is prevailing.
So you would reckon, sir, that, okay, let's try and break it down. And I have 4 or 5 questions before I end up my time with you, the allotted time. So first, you mentioned the hot summer season, which your peers that I spoke to yesterday also alluded to. Would you reckon there is both volume as well as value growth that we will see immediately in Q1? And you reckon that that would continue for the rest of the year as well?
Yeah, so right from February, I've been saying my forecast for the summer season is the growth will be anywhere between 20 to 25% compared with 2019 summer. So 2020 or 2021 summer, you should ignore because there was lockdown, many restrictions. So if you look at the 2019 summer season, I mentioned that the growth should be anywhere between 20 to 25%. But looking at the summer, people felt that the growth may be even 50%, 60%. But always there is some correction that are taking place. The first correction that has taken place is related to the inflation containment measure of interest rate hike. So what is going to happen there? The consumer finance purchases, which constitutes around 40%, that will be slightly impacted. So I have a feeling 50% growth may not happen, and if 50% growth would have happened, I don't think there was material in the market at all. Nobody had planned for that kind of material, especially when the supply chain constraints are on. So I still maintain that the growth will be anywhere between 20 to 25%, more like 25, and Blue Star growth in the cooling product segment should be 25 to 30%. And we will grow faster than the market as we have done every year.
Got it. And your performance versus the industry as well, right? Because I think you had mentioned earlier that the midterm target is to achieve the 15% market share. So for example, in the room AC segment, you were probably at 13% in Q3. Has it inched up a bit? Do you plan to lead it up to 15% in FY23 itself?
I do not have the figures of
March,
April, but our estimate is that we would have done around 13.25% because we are a larger player in the institutional segment.
Sure.
Rather than the retail, the figures will come. But that's not the point. The point is that the market has to open up because the production capacity is doubling in the country thanks to the PLI scheme.
Yes.
So the PLI, people earn money only through the revenue. It is not you can produce and earn the PLI. So the PLI is paid on the incremental sales over FY21 figures. So therefore, everyone would like to sell more to earn. So one axis is the investment slab. Second is what is your incremental sale. So production capacity doubling. If everyone wants to earn the PLI, they have to go out and sell. So the scale, backward integration, component ecosystem put together will make probably the ACs more affordable. Sure. And one would look forward to the penetration growing from 6% to 10%. If that happens, the market share is the second part of it. Indeed, you have to compete, you have to be ahead, and you have to grow faster than the market. But most important thing is market has to grow or explode. And I am certain room air conditioner category next 5 years is going to be a golden period.
Okay, fair call. Just one quick follow-up there. You mentioned data centers. A lot of people say that data center industry in India can probably grow at 100% CAGR for the next 10 years. Would you, I'm not asking you to predict their growth, just trying to understand from you, do you foresee that to be a key driver for your sales as well over the course of the next few years? And how big a driver?
It's a very important thrust area. So as far as the electromechanical project business is concerned, you know the history that from 2009, we were very measured, that we were interested in the cash flow rather than the market share. And we were interested in doing that business only if it is profitable. That's how it was. We were very, very measured. Now with the construction cycle on, there are certain segments where we are becoming leaders, like the manufacturing. This investments are happening because everyone is expanding. Here again, PLI is applicable for many sectors. The next one is the data center. So data center growth, you are right, it is going to grow in an unprecedented manner. And we are one of the preferred players there. Our scope is MEP, or the mechanical, electrical, plumbing. And that part of it, we will continue to do well. The other three things are actually airports, metro railway, and water-related MEP projects in water distribution. So these areas also, quite a few inquiries are there. Many orders are getting finalized. So the construction cycle will benefit us in driving that business also. The CAGR there will be 25%. The market size is very big there.
Okay. So I have a sense of the number of the volume numbers, and maybe midway through the quarter, sir, we can talk about the various facets of demand, so it doesn't get clogged only in the earnings conversation. But last two questions before I have to let you go. One is on the operational front, and I mean, commendable that despite the input cost pressures, which I assume would have been there, you maintain margins. How have you done that? And do you reckon that some impact could spill over in Q1 and there could be an impact thereof? Or do you reckon that you'll be able to either maintain, or if the commodity prices come off, then improve the margin performance in the quarters to come?
So from here on, it will be only improvement. It won't slide back at all because several actions have been taken. So the very first one is re-engineering the products. Because we know very well that from 12% market share to 15% market share journey, we should address quite a few markets, which are first-time buyers, tier 3, 4, 5, and for aspirational middle class. Unless and until you address that with a particular range of products, we will never be able to achieve that market share goal. So therefore, we have re-engineered the products. Today, you can see we can compete with anyone in the country. Absolutely no problem. So a lot of R&D efforts have gone in there. The next is that reinventing the supplier ecosystem. So the alternate vendors, and bring about the localization in a big way, backward integration. Now, CCT plant, when it comes in, you will save a lot of logistic savings. We had talked about that earlier. So close to 45% of our business comes from southern region. So CCT plant can feed overnight to any of the markets, whether it is Telangana, Andhra Pradesh, Karnataka, Kerala, Tamil Nadu, Puducherry, it will be able to feed the material. Now the raw material can come to Krishnapatnam port or Ennur port and can easily reach CCT. Today, the material is moving from Navsheva port all the way to Himachal Pradesh, and from Himachal Pradesh, finished goods are moving to all the southern states. So we see potential cost savings from the CCT plant itself. So therefore, from here on, margin will not slide. It will keep on improving. For example, in the company, our goal is to take from the 6.4 to 7%. And the unitary product segment, which from 7.9 had become 7 now, our goal is to take it to 9 over a couple of years. So we will work towards that. And most importantly, the problem in India for air conditioners is the scale. Now you are witnessing scale coming in. So therefore, on that front, we should be doing well. A lot of activities are going on. Investments are taking place in R&D or testing, manufacturing, backward integration, so on and so forth.
Great. Mr. Thiagarajan, I understand that we have to let you go because of the timing constraints, but this is the 6th of May. Sometime around mid-June, it would be lovely to have a conversation with you about not only how the summer is gone by, but really your vision on how do the next few years shape up for this segment and for your business in particular.
Yeah, we will do that certainly. It was nice interacting with you.
Likewise, and congratulations on a good quarter. All the best for the quarters ahead.
Thank you very much.
And viewers, thanks for tuning in. That's Blue Star talking about a 25 to a 30% growth over Q1 FY19 and margin expansion as well starting to come in. Thanks so much for tuning in.